Hello, everyone. Simon is here with AvaTrade, and I want to welcome everyone to our weekly trading plan webinar. And a special welcome to new people. And for those of you that are here for the first time, just a few words about the purpose and the idea of the webinar. And it's all in the title, as I always say. As traders, you like to say, you plan your trade and then you trade your plan. And this is the whole idea of the webinar. We're trying to put together a big picture, some fundamentals, some technicals, put it all together and try to see and create a structure, create some directions for the upcoming week. That's what we do here. Few things about myself. This is me, Simon Friedman, Senior Account Manager. I've been involved in trading industry for over 22 years. For about 11 years, I was licensed proprietary day trader back in New York City. And after that, I moved to trade in a different way, stopped the full-time day trading job, and also started to mentor, educate other traders. And currently, I work with customers here with AvaTrade, trying to really help as much as I can traders to maybe become better, to understand markets better, and so on. The agenda. The agenda is usual. We talk about indices, stocks, commodities, Forex, sometimes not in the same order. And of course, our channels, you have Telegram, you have Twitter, and of course, my favorite YouTube channel. Why is it my favorite? It has a lot of content there. You have tutorials, you have webinars that are being recorded and posted. You have a lot of resources, and I highly recommend to use them. You can also subscribe to our channel. You can share it with other people. And of course, you can click on that notification bell so you'll be notified when new things are posted. And we're posting them on a daily basis. Before we go further, of course, the risk warning, you can find the full document on avatrade.com. And the whole idea is whatever we do here is purely educational, and we're definitely not suggesting any trades. Now, before we go to economic calendar, I'd like to really mention a few things that have been going on. And first of all, something that I just researched, since 1950, the S&P 500 has finished December with positive returns more than any other months. And they give the number, this is according to Dow Jones market data. It's up 73% of the time, and we just entered December. So it's statistics, but logically speaking, as being part of Wall Street for many years, what's happening there, they like to get their bonuses. And for years, it's been the same thing. You can call them Santa Rally or whatever it is. They try to run the market up to the 31st of December, so they closed the year with nice results. So all the Wall Street participants are getting nice Fed bonuses. And that's been happening. You feel it in New York a lot. And of course, it's not just New York, the financial industries all over the world. So let's see what happens. We have a lot of things. We had Powell speaking and saying the market took it kind of a soft language that they are still raising, but the next raise, interest raise that's happening after the 13th, 14th of December meeting, they expecting lower than 0.75. It looks like 0.5% is on the table. Now, we also had NFP data, which was, we'll take a look at the charts in a moment. The market reacted negatively to it. Why? Because the positive, that's the whole trick today. Everything's upside down. Normally, the more jobs added would show the economy is great and the stocks will go higher, but now they're going lower because the Feds are watching, as I mentioned a few times already, they're watching how economy is doing, how's the employment, and of course the inflation. That's what they're trying to fight. So we reported 263,000 jobs versus 200 predicted, 200K predicted. Unemployment stayed the same, 3.7%. So market took it in a negative way because it gives more space or more ammunition to Feds to continue what they do as far as increasing the interest rate. So we'll take a look at the chart in a moment. And so the market first went down, and then it's pretty much recovered to the pre-announcement area. And we'll see how this coming week will start and what is going to happen. Now, we have a few things on economic calendar moving into it. Again, for the new people and anybody here, what I do, I just pick the high impact events. So if you use economic calendar on our web trader or the app or any other third party providers, you can choose and filter things out, whatever really relates to your trading, what you trade, what part of the world you're trading, and so on. What I do here, I just took the high impact, and let's just go through it really quick. So we have European Union retail sales on Monday, service PMI from US on the same day. Tuesday, it's about Australia. We have the interest rate decision and the statement. Wednesday, we have GDP from Australia. Then we have GDP from European Union. We have interest rate decision from Canada and the rate statement. Very important, as we will see later on when we get to Forex. Canadian dollar has been really suffering against all the currencies. We'll take a look later on today. Now, GDP numbers from Japan, trade balance from Australia again, CPI numbers from China, and important thing, Michigan Consumer Sentiment Index. So these are the events. Again, this is just the high impact events. If you put a mid impact or low, you're gonna have so much more. And again, I will repeat it again. If you are a trader and you're trying to be successful, you're trying to be prepared, it's important to follow up economic calendar. You cannot know exactly what's going to happen. Even if you knew, that's what I always say, even if you received the message way before with exact numbers, you still wouldn't know what exactly to do because you wouldn't know how market will react to those numbers. So we can't really predict anything. But the fact that we're prepared for a certain day and time that certain announcement will come out, it helps us to really make decisions. Should we stay in the trade? Should we stay away from the trade? Should we close the trade? There's a lot of things and a lot of approaches that traders take. Depends on your trading style, on your risk tolerance, and everything else. And of course, depends on what instruments you trade. So it's important to be aware of it in a short sentence. Now, that's as far as the economic calendar go. Now, we're going to move now to the MT4, and we'll try to go through the markets and see what's going on and what could be really a plan for the week. We'll be going through some indices that are prepared, some stocks, a few things from last week. We'll try to see how things played out, and of course then commodities, Forex, and maybe towards about cryptocurrency at the end. Now, let's take a look at actually S&P 500. As we mentioned, we're entering December. And as the statistics say, as I mentioned, and I quoted Dow Jones market data, they say 73% of the time the S&P is up in December. Now, what's happening now? And I want to bring us to Friday NFPs. Now, before that, all this move, that's what the Powell's speech was, and he sounded a little bit softer than expected, and that's what the market liked. We had a nice move to the upside. Now, this move down is actually where the NFP numbers came, as you could see right here. 30 minutes is going to be actually, it's right here. When the announcement came, the market just sold. And later on into the end of the day, we actually reached the pre-announcement area, and then the last hour we were going down as well. So all this move pretty much sustained, which could be actually showing us what the analysts, what Dow Jones market data is showing, that we could actually have an up December. But that's, again, just speculation and statistics. We don't really know what's going to happen. And this week, as we mentioned, few things are happening. The key week is going to be the following week. And few things. Well, on the 14th, they will announce the interest rate, actually. And again, they said that 0.5% is on the table. Some still think it could be 0.75, but others say even 0.5% is high. It's higher than usually increases. So, and before the 13th, we actually have a CPI data. And that's, as I mentioned, one out of three aspects that the Feds are watching. So the CPI, and the next day we have announcements. So definitely the CPI numbers are going to be very, very important and will be watched by the whole financial world. So that means that this week, this coming week, it could be choppy. It could be lack of direction. It could be just waiting what that interest rate decision is and what the CPI data that precedes it. So that's the thing. So again, indices. So S&Ps. I'm going to bring it to another chart where we have the moving averages. Again, just if you have any questions, this is the 50 moving average. The yellow is 100, and red is 200-day moving average. So if you take a look at the weekly chart, we really had a nice recovery pretty much from the 200 moving average that we hit first time the week of 25th of September. Since then, we tried to move higher. So we still didn't reach this recent high on S&Ps, and we are about to hit on the weekly chart the 50-week moving average. On the daily chart, we are above the 200 moving average. Now, what could happen this week? Pretty much, we have to see, first of all, again, without any predictions or without any strong opinions, we have to see first, if we are to move higher, we have to see first this level on the Powell's speech on Wednesday, and the high here was 4,093.25. If we break through it and start closing above it, we have a chance to continue moving high over here. And I think the bottom of this day could be our low of this range, and it makes sense. So we had the high range day, and now we just have to see we're in the channel pretty much. And if you zoom out, there was a lot of actions in this channel over here. There's a lot of action in this channel over here, and we're back to the same channel pretty much. So let's see what happens in this upcoming week, and how are we dealing with this high range day of the 30th, the last day of November. Okay, that's going to be interesting to watch. Now, I want to bring China for a moment. China had a nice recovery, even though there's a lot of mess there, as we mentioned a few weeks in a row, with the zero COVID policy and people really protesting, and the cities being shut down and production is being shut down. As we mentioned, I think last week, Apple is on back orders for the iPhone because a lot of components or maybe the phones themselves are made in certain city or cities that are in a lockdown. So we had a nice recovery, and take a look, we stopped around 12,900, and this is a very interesting level. We made, if you go left, look left, that's my rule on the chart. We moved higher from here, from about the same level here, 12,902.5. We made a high, and then we were sliding for a while. So from this high, the end of June, we were going up till the end of October, when we reached the low of 11,150, and from there we tried to really recover, and we made some kind of recovery, but we're facing that level, the key level of 12,900 again. So on Thursday we broke through it, but closed at lower than the opening. Was a down day, and Friday we hit that level again, and we closed a little bit higher, 12,907.5. So let's see how this week starts for China. Okay, and of course, with it, I always bring two things, and it's okay that I jump. I hope it's okay that I jump to different assets. But every time I speak about China, I bring up two assets: crude oil and copper. So take a look. Crude oil tried to run up on the China positive moves to the upside, but it didn't really do much. It tried really hard. And copper actually moved nicely recently on this move on China, and we are currently above the 200 moving average. So first thing comes to mind is actually to draw the trend line here. And what could be next? We could actually hit the trend line again. So what you do, it's very simple. You just connect the two tops, this one, and then we might actually reach that level, and that could be it could be a resistance. Sometimes it happens. Again, nothing works 100%, but this is one of the things that the traders are using. Okay. Speaking of which, I'm going to go back to the S&P 500, and we actually at a very interesting point. I just reminded myself with the trend line. Take a look. If you remember on the old chart, I brought the new chart here, so it will be clear. But this is the old chart. Remember, with tons of levels. I'm just going to use it for illustrating how the trend line is actually working. So if you remember, weeks back, I drew this channel here. So the top of the channel was hit over here. So what we did, we connected the two tops, and we hit this level in the mid-August, and we sold from it. And we actually just touched it again, or briefly touched it again. If you move to daily chart, the line stays. We just hit it on Thursday. So similar idea. If you go to copper now, it could be. We go to new chart. It could be that actually we are facing a similar scenario on the daily chart, that we might be hitting that level, and that could be a resistance, especially where we are above the 200 moving average. And sometimes the asset tends to come back like it did here. We broke through 200 moving average, and then we sold again. So again, you just connected to China. Why? Again, for new people and people that don't experience a lot of trading within these assets, China is one of the biggest users of both crude oil and copper. Of course, crude oil, we know what it's used for. Copper is used for a lot of things, especially for new constructions. And as this China index was falling in the economy in general, and there were issues with real estate developments and everything else, so the copper really had an extended sell-off as well. So now, again, back to China, we are hitting this resistance. We'll be seeing what's next. Now back to US indices. NASDAQ is trying to really hit that 200 moving average, is having a hard time. And again, the strongest remains Dow Jones. Dow Jones, if you remember, we mentioned this level here that we might go through it. This is the level of mid-August when we hit 34,244. We did break through it again with a very strong day. This is the announcement of, or speech of Powell, when the market took it in a positive way. So we did close above. We tried to go back below. We're still remaining above this key level of mid-August. Mid-August of current year. And again, this could be also a continuation of a market going higher. This is the weekly chart. If we close the week also above this, so this is a very strong sign and possible scenario that we might go higher. And of course, the opposite scenario is also possible, that we can just bring it back below again and start building resistance and so on. And again, uh, sometimes I repeat myself, but in this case, it's necessary. Not the week that we're starting, but the following week, we have that announcement and we have CPI data before that. And based on that announcement and based on the policy statement and of course the press conference, we'll see what the market is doing. So we're really at the key levels here. So we established the US indices are trying to run, and the strongest one is Dow Jones. And again, I think I mentioned last week with the key stocks being part of the index, they really have been running something like Walmart, Boeing. We'll be taking a look at it in the moment. So DAX, also very nice run, the German index, and we are really sitting at the top of this move, and we could be retesting these levels of resistance that we had back in June. Let's see what happens. We have some data coming out, and again, what's globally will be happening, we'll be watching. Now, UK, also very interesting situation. We just hit the strong resistance, and interestingly enough, you know me by now, I'm very big with levels, and it's not just me. A lot of traders that are successful, they really like to follow the certain levels. Simple trading, the resistance, the support. Now, I just want to show you something. Not even these levels here, but the level from which we stopped the move to the upside. This was back in February 10th. Now, just try to pay attention how precise things work sometimes. Again, not always. High here is 76.29 and a half. Okay, you following right here? So 76.29 and a half. Now, we had few attempts, and the last attempt we just had on Thursday. Guess what the number is? 76.29 and a half. 10 months later. Okay, the same number. What does it say? It says the history repeats itself and explains the reason why certain levels are holding. Because as here, back in February, some sellers were really sitting there with a huge amount of index to sell, and then we sold from here. And they tried again here, and they tried again here, and they're still there. So these are the things that us retail traders are looking for strong levels where the big players are present, so we can actually take part of the action. Again, nothing works 100%, but levels are very interesting thing to follow. Now, Nikkei, the Japanese index, also, we tried here. It's back in end of March. We didn't reach here again. Then we had another rejection here as resistance was strong. Resistance here. We had a breakout. This is all daily chart. We closed higher on the 30th on the FEDs, where the global markets ran. The following day was sold out. So we know that the resistance is holding there around 28,400, and we are holding above the averages. And as we showed, there's going to be some data from Japan. We'll be seeing what's happening next in the Japanese index. Now, Nifty, I just want to bring this one. As we mentioned, it's been super strong, stronger than other indices, making the highs. And we mentioned that we broke through this high of October 10th, and we closed higher. This is the weekly chart, so I'll bring a daily chart. We couldn't break it, then we opened with a gap, and then we are trading above it. So it seems that it has a hard time going higher. Again, it's just an observation. We can easily continue to the upside, and if we do, we don't really have any reference as far as how high can we go. I think this could be the all-time highs if I'm not mistaken. Now, so we can just continue. In this case, there's no resistance, so anything could happen. And the opposite scenario, of course, is possible that after this break through the highs of October, we might actually bring it back below this level here, around 18,500, and maybe start building resistance. In that case, we might actually slide and retest the moving averages one by one. And again, it depends what the global indices are doing, even though this index is kind of doing its own independent play. So we'll see how it is going to play in the upcoming weeks and days. Now, few things from last week. We spoke about IBM, we spoke about Walmart, we spoke about earnings of the CRM of Salesforce. CRM is a symbol for it. So let's take a look. I'm going to bring the MT5 for it. So IBM stock, it's been super strong. It's been holding here. We're hitting the 149.50. And it looks like we're having a hard time breaking. Let's see if we hit 150. On the 23rd, we hit 150, yes, 150. And this past week, we couldn't really hit it again. So it looks like 150 could be the resistance. Super strong stock. And as I mentioned, the Dow Jones is moving on these stocks. Next one is Walmart. But before I go into it, I just want to show you the Salesforce. Salesforce didn't really report a great news, and the outlook is even worse. So again, observation, the CEO resigned. And it's a very simple logic. If the company is doing great, CEOs usually don't resign. So, and there was a title, don't remember where, it said the CEO resigned after the weak outlook. So the stock is not doing that great. And if you take a look at the weekly chart, we've really been selling. And there's a build-up going on for possible continuation to the downside. Of course, it could be a build-up for reversal. But again, taking all the technicals and fundamentals and CEO resigning, it doesn't look good for the future of the company. So let's see if it, what the next thing that they do. Now, back to the MT4, and just want to bring Walmart. Take a look at Walmart. It's been very strong. We really had a nice run from the earnings, and we're trading around 152, 153. The stock is holding here, and on the weekly chart, the first thing comes to mind is this level here from 15th of November 2020. So 2 years ago. We are hitting that level. So the high here was 153.28, we just hit it last week. So and we hit it, and we're building below that level. That means that there is a resistance again, and based on what the whole market will be doing, if we continue hitting this level and failing to break through it, we might actually go into correction a little bit. And the opposite, of course, if we finally break through it and start building the support, we might above the level. So we might go and retest this recent highs, and that was back in mid-April at 160.65. So that's the Walmart. And again, these stocks, Walmart, Boeing, these are the stocks that move Dow Jones to where it is now. Now let's take a look at Boeing. Boeing just had an amazing Friday after this build up, following the move to the upside. We're above all the moving averages, and it looks like we could be approaching this level over here. The high of this level is 189.67, and that was back in April 21st. And we'll see how the stock is doing there. Again, we are above all the moving averages. The stock is very strong. And as I mentioned last week, I don't know what it is. Maybe they're ordering some airplanes. It could be war related. Boeing also does things for the military, and we'll see. We'll see what's the reason, and we'll see what's next. Now, let's take a look quickly at Tesla. Tesla trying to recover after this move. We had the low of 166 back in 22nd of November. And if you remember, since all this issue with Twitter, Tesla's been really selling. The stock is not doing that great. And on Thursday, on the 1st of December, Musk actually unveiled the first electric semi truck, and I think they already have orders. PepsiCo is ordering a few trucks, and it looks like the traders and analysts taking it in a positive way, and we could be seeing some recovery in Tesla. The stock's been suffering a lot, of course. Like I said, this issue with Twitter created a lot of issues. Speaking of issues, there are a few things in the news last week that Tesla or Musk personally had some issues with CEO of Apple. There were some publications there at the end. It was all peaceful, even got a tour at the Apple facility by CEO, so they're all friends and so on. And speaking of which, Apple is really, some CEOs are really saying negative things about Apple, how they really controlling the app and so on. And I think with Musk, it was some rumors that Apple is about to take off Twitter off the App Store and so on. So these are just the things that were all over the news, and then they just it looks like they made peace. So in any event, Apple stock itself is not really doing great. It's not following the general market, especially not the Dow Jones. 150 level, the key level that we kept on hitting, we're still below it. We close at 146.76, and we might actually see some new things or some new attacks against Apple on the CEO levels of other companies. Let's see how what brings this upcoming week. Now, Microsoft also had a nice run to the upside. We're sitting around 100 moving average here. And again, depends on all the market conditions. We'll see what's next. Facebook actually had a nice recovery here, and it looks like we're on the way to close this gap. We are trading above 50 moving average on the daily chart, and it could be that we are trying, or the stock is trying to really reach that and close that gap. And let's see what happens. It's a nice recovery. If you remember a few weeks back, I said, the market will probably move higher, not until Facebook shows some strength, because one of the key stocks and it's been really selling off. And here we started this recovery in the beginning of November. So the nice recovery, we went from the low of $88, let's say, to 123. It's a very nice recovery. Speaking of recovery, Netflix had a very nice recovery as well. If you take a look at the weekly chart, we were really sitting here around 175, trading at 319. And on the daily chart, the similar idea. It looks like we are trying to close some gaps here. The stock is strong. Maybe that's new policy they have with the advertisement subscription and so on. As the analysts, as I mentioned a few weeks back, analysts are really looking in a positive way for that change. And maybe that's what's moving the stock higher. But technically speaking, we are making higher highs and higher lows. The stock is doing great. Let's see what happens next. And Nike. I want to bring Nike. We hit exactly 200 moving average here. That's one thing. And we are close to this resistance that we had, from which we sold, and the high here was 113 and a quarter, 113.27, and we about $1 away from it, dollar and a few cents, and we're hitting the 200 moving average. Again, I didn't see any specifics on fundamental. The stock is reacting in a positive way in the general move in the market, and we are facing the levels of a possible resistance here on Nike. It doesn't mean it's going to sell off. What it could mean, we're going to have a hard time breaking through this level, and it's a very good point when we hitting the major levels. It's very good time to observe the price action. If we break through it and start building support, we might prepare for continuation. And if we have a maybe even fake breakout, and then coming back down and building some resistance, there's a possibility of continuation and maybe retesting lower levels here. So that's as far as stocks. And a few more things just want to bring up. The banks. And the banks also had a very interesting point. Goldman Sachs had a nice run, and we are facing, again, the same, we closed the gap here. We are facing some kind of resistance around 390. And Goldman being, of course, the leader of all the banks and brokerages, as we know. So it's really consolidating here. So let's see what's next. We might actually reach the top, and we might continue or start a little bit of a correction to the downside, or it could be a build-up or accumulation for continuation to the upside. And if you take JP Morgan, it's a similar idea. We made a move higher. We broke through this resistance here, and now we're building support around about 133 area, and that also could be a very bullish sign and continuation to the upside. We are above the 250 moving average, and we are below the 100 moving average. Bank of America, not so strong, and Citigroup, not strong at all. So as you see, Bank of America, Citigroup are the laggards, and the leaders are JP Morgan and Goldman Sachs especially. So that's it pretty much with the stocks. Let's move to commodities. And I want to start with crude oil. Crude oil, actually, it's a very interesting situation here. We spoke about it, pretty much speak about it every week. But Monday, what kicks in is actually the price cap. And what happens there is the G7 together with Australia, they reached the agreement together with the European Union, and on Monday they actually put a cap on Russian oil, and the cap is a $60 per barrel price. That means they didn't want to cut the Russia of it because they're afraid that it will create another crisis, energy crisis. So they really cut the price to 60. That means that Russia can continue. I'm not sure exactly how it works. So I guess we'll hear more details on Monday. But it looks like Russia can continue selling oil, but it cannot get more than $60 per barrel by selling it. They're trying to cut the profits of Russia, because all the profits, of course, go to the war and on the attacks and bombing of Ukraine. So that's what's happening in oil. So this week, the starting Monday, we'll probably see some interesting developments in the oil market. We tried to break through. I'm just going to bring the old chart when I had my levels on crude oil. I believe it was 81.5 that we mentioned a few weeks in a row. Yes, 81.5, the level that we had support, and we build resistance. So on Thursday, we had a nice run on oil. We went to 83.32, and then we went back. So it looks like this 81.5 area is still holding. And based on all these new rules and embargo and everything else, and price cap that's kicking in on Monday, let's see what oil is doing. And that's going to be interesting to watch. Now, natural gas had a strong sell-off after hitting this 7.5. And then, as I mentioned to you last week, with 7 we didn't hold, we went straight back, and it looks like we're fishing for support. We're a little bit below 50 moving average. And as I always say, trying to use technicals in natural gas is not so easy because a lot of fundamentals are involved. The weather is changing. The Russia-Ukraine war is adding more uncertainty into it. So as of now, as you could see, we tried to move down with sell-off October 21st, then we tried to recovery $7, around $7 was a resistance. We moved briefly above it, then we came straight back. Pretty much went the whole week down days, 4 down days in a row, and then we closed at 623, almost 6.25. So it's hard to say what's next. I guess we're going to have more fundamentals coming from Russia and all this oil-related thing, and definitely natural gas will be also sensitive to what's happening there. Gold had a nice run since Wednesday announcement or speech of Powell when the dollar sold. We're going to get to the dollar in a moment. So gold, actually, we broke through 1800, the key psychological level. We were at almost 1804.5 on Thursday, and Friday we tried to sell off on the NFPs, but then we had a little bit of recovery. So we opened on Friday at 1802.25, and we closed at 1796.5. So we didn't really hold that 1800 mark for long, with just one closing day at that price. So again, we'll see, how this week goes. We'll see any details, any speculations, any gossips or rumors about the Fed's on the 14th decision. And I guess we will, in any event, we'll need to close above 1800 in order to go higher. And if we are doing a lot of attempts and we fail it, there's a possibility of, I'm going to bring the cleaner chart here. There's a possibility of a move to the downside. So this is the level from which we sold out starting the 12th of August. The high here was 1803.5, 1803.57. So we hit that again. We hit it almost on Thursday. Actually, we did hit that level, but Friday we didn't really move higher. So as of now, this 1803, 1804 area, it represents a strong resistance. That's as far as gold. We spoke about copper, that we might be hitting this the channel. And again, let's see what China is doing. There. Let's take a look at soft commodities. We haven't spoken about it for a while. So it's been really downtrending here, trying to reach certain level of support. We still didn't really reach it, so it's hard to say. We're still in a downtrend on wheat. Corn, same thing. We just broke through the recent support, so it is in a downtrend. And soybeans, let's take a look. Soybeans are actually holding. So the out of three, they are stronger. So when things turn around, maybe soybeans will be the first one to run. Again, just the speculation. So nothing special on the soft commodities. Cotton really reacted with China to the upside, but now we are slowing down. We are selling a little bit here. Nothing specific here. If we continue going lower, maybe we'll come to this level of support that we had. And there's not really a clean chart over here. So let's move to Forex at this point, and we start with dollar index. Dollar index, let's just take a look in chronological order. We start selling with the Powell speech, and that's what gold did the opposite, right? Going higher. So we had 3 days to the downside. We just broke through 200 moving average. We have 2 days closing below the 200 moving average. Now, if we draw the line This could be the line of support from which really we made highs here. The low here was 104.49, and here 104.50. So 104.5 is the level currently being support. So we did close Friday. We closed below its hourly chart. We really this was the move with the NFPs, right? The dollar reacted in a positive way, and then it came right back. So the first thing we want to see on the dollar index is really breaking down this pre-announcement level, and there was 104.37. If we are holding that level, there's a chance that we hit support, and we might be turning back and moving high. As of now, it is currently a downtrend. After this initial move to down, we confirm it with the lower high, and we just make a lower low after a second lower high here. So we are downtrending here. We just broke through 200 moving average, and we're facing a major support over here. So we'll be watching dollar index, and of course, if you take major pairs, everything had a nice run. So Australian dollar, we just hit 200 moving average. We're pausing there, and we have interest rate decision from Australia. If I'm not mistaken, we mentioned it today. So we'll be watching that. If you take euro, euro had a very nice run. We broke through 200 moving average. We confirmed the support, and we are making higher highs and higher lows. And we could be continuing on euro dollar and starting to really retest this area. Then we have multiple attempts to break through, and that's around 106 area. And then we failed, and we start sliding lower. So it could be, if we are continuing, so 106, it's about 60 pips away, and we might see a resistance there on euro dollar, which traders would be really considering trying to enter the short trades. Pound is also at a very nice level here. The currencies look very nice at the level, at least, that we're hitting certain level of resistance that would give us an opportunity either for reversals or continuation to the upside. It depends what the instrument is doing at these levels. So here, the high was 122.92, and we closed, or the high here was 122.99. We didn't really hit 123, and we closed 3 pips below this level. So it looks like we are facing resistance, like we did here. So that's pound. New Zealand dollar also trying to come and retest this resistance here, resistance area. We're above all the moving average. So pretty much the reflection what dollar index is doing. On the dollar index, we're sitting at the support, and all the major currencies against the dollar are reaching that level of resistance against the dollar. So it's going to be very interesting to watch. Now, even dollar yen, if you remember, we spoke a few weeks ago. We said that at some point things will turn around. Maybe the Bank of Japan will take some actions, or dollar will get some weak signs. And we actually had a nice run to the downside, and we closed at 134.31. And the next level of support it could be around here, from which we started all this run, and that's around 132.94. That's about 140 pips away. We are below all the moving averages here. And USD CAD. Now, with the weakness of the oil market, and again, for new people, the Canadian dollar is very sensitive to oil prices, as Canada is being one of the countries producing oil. So Canadian dollar has been weak, and I just wanted to bring to your attention at the end of the Forex review, all the pairs with Canadian dollar in it had a nice run. Euro dollar, I think, did the most. Take a look at this move. Just want to show you weekly chart, so it looks significant. Take a look. Euro dollar, we hit, this is weekly chart, we're approaching 100-week moving average. Australian dollar, also very strong move, we just broke through the recent resistance. CAD CHF selling off, we're hitting this highly busy area here that we can find some support possible. NZD CAD, we just hit precisely 200 moving average. So maybe, I believe we spoke about it, the interest rate decision from Canada is coming, so maybe they will do something to support the currency, and maybe we'll see some nice reversal. That's why all the pairs with Canadian dollar could be a nice play for the upcoming week. Now, which way, of course, we will see, but in general, it's been super weak. Of course, two things can happen. The weakness can continue, or we can see some nice reversal and correction in the opposite direction. So that's as far as Forex. And at the end, let's just take a look at the crypto. I can't really say anything positive about it. Like, I'm not the only one. New things are coming out. A lot of people lost money with FTX, and other issues are coming out, personal and business and so on, of the CEO. So Bitcoin is trying to break through 17,000, 16,900. Again, we're still in the same range. Just want to bring the old chart that I mentioned to you every week. We are sitting in this range between 15.5 and 17.5. Nothing changes. So a lot of build-up going on. And if you see build-up for a long time, at some point it's going to shoot either up or down. And I guess we will be seeing what's next. And Ethereum, similar idea. That's it pretty much, guys. I really want to thank everyone for participating. And just to put it all together, we had a nice week with the Feds. First, the Powell, he sounded soft, the market reacted. Then we have NFP's market reacted to the downside, then recovered. And we are 2 weeks away, a little bit more, less than 2 weeks away from the interest rate decision. That's on the 14th. And on the 13th, the CPI data, there will be a big indication for what the Feds are going to do. And again, on the announcement on the 14th, it's a little bit premature to talk about it because it's not happening this upcoming week, it's the following week. But still, in that expectation, we could see how the market reacts. And they're going to be, of course, announcements. And as I said, some rumors and predictions of the analysts, what to expect and so on. I want to wish everyone a good weekend, whatever's left, and enjoy it. Get some energy, prepare yourself for the upcoming week. It's going to be an exciting week to everyone. And take care of yourself, stay positive, and we'll be back next week. All the best.